Hey, how's it going, everyone? Been a little while here on YouTube, but I'm going to do a recap of today's price action. What you're looking at is a footprint chart. This is also called order flow. If you're unfamiliar with this, just go to the home page of the channel here, and I have a quick video going over how you read my specific footprint charts. They're very customizable, so again, the video is for my specific footprint charts. But what we're looking at here is transacted volume on the E-mini. So we're going to go over my daily plan today. These zones, well, actually it was this one, and these two. These four zones is where I was looking to be an active market participant. We're going to go over the makings of today's daily plan, and we're actually going to look at some of the live tape reading that I was doing in the room. So let's start with the, where shall we start? Let's start with the daily plan. So my daily plans always start with TPO charts, also called, or time price opportunity charts, right? That's what TPO stands for. And you'll hear people call them market profile charts. So for newbies, I know this looks intimidating, but it's not at all, really. They're very simple to learn. Doesn't take you long in the slightest. And once you do know what you're looking at, you simply just glance at these charts and you know the information that you need. So why do we use these charts? Well, they help us look and gauge the market auction. You know, do we have exhaustion? Where's price happy to trade? We're looking at things such as the shapes of these profiles, where points of control are lying, value area low, value area high. You know, do we have overlapping value? Are we cleaning structure? Are we currently leaving structure behind? Do we have structure above us, below us? Things like that. So again, I always start with the TPO. I don't trade the London session, so when I get to my office in the morning, I come and see what the overnight session did on the TPO. From there, I come over here to my 4-hour time frame. I say all the time, this is by far my favorite time frame. I am primarily, 99.9% of the trades I take are intraday. I'm a day trader. And I believe that the 4-hour has the most information that we could take and maximize our knowledge and take the best trades or cleanest trades off of. So, here I post on the community tab here on YouTube, but as well here at StockTwit, same thing. And I annotate everything I see, everything I'm reading in the order flow. I have listed over here. Do we have trap volume, aggressive bid, aggressive offer? Do we have trap participants somewhere? Are we eyeing participant stops? Do we have a lot of sellers baked in somewhere looking to run their stops and then for a pullback? A whole bunch of things. Are we building, high volume within an area that we're looking to pull above and trap those participants? Are we watching for a breakout or a stop run? There's ways that we could tell the difference of that using the footprint or reading the order flow. From there, I do the exact same thing. Let me bring it up on my daily chart. So this is the daily transacted volume on the E-mini. So as we can see here, we had lots of concentrated volume. If you remember, we were range bound a lot last week. Run stops come down. There's participants who are trapped here. They provide a floor, yada, yada. You get the point, right? So we build our context between higher time frames, work our way down, and then we have confluence between these time frames, between the different tools, between our TPO charts, our footprint charts, and there's even things that we can take from bear candlestick charts to build this confluence. So from there is the daily plan, right? So let's take a look at the intraday order flow. So hindsight, obviously anyone could say today was an obvious long, right? Trend day up so far. You got to be long. Well, unless you're just blindly opening out the gate, or maybe you're super good at reading smaller time frame tape, you could get an entry at open. Me personally, my rules, I don't trade, the open 15, and I rarely trade the open 30. That's just me personally. I know my win rate is better from about 10 a.m. to I would say 12:30, and then I like coming back for the afternoon session as well. So the real long, and this is in hindsight, I'll pull up some pictures, was down here, right? We knew that there's trap participants here. We saw this bid, right? Look, exhaustion at the lows. We're transacting 174,000 contracts, 116, 115, and then 2,000 contracts. This is what exhaustion looks like on the tape, followed by over here, right? So let me pull up. I have screenshots. This one first, right? Full disclosure, I missed this long. I had my orders here on Thursday, as you can see, just before 2. market time, of course. And we only visited where I was looking to long over here at, I think it was like 3:55 right before the cash session close. And per my rules, I rarely take trades the last 15 minutes, so I left it. Now there was another entry. So on Thursday, only 1/3 or one of my orders would have been filled. But then Friday, the other two, I believe, I think it was both of them, maybe 2/3. I think it was all of them though, would have been filled. But again, per my rules, I could not take it. It was in the open 30. It may have been like in the open 5 or 10 minutes of the market open. So no problem. Then what? Well, I got to wait for a short. Now, past 2 days has been trend days up, but that doesn't mean I'm trying my hand and shorting blindly, right? The tape will tell us when it is time to short. So let's take a look at today in the room, what I was talking about. Actually, let me pause so we can zoom in and read these a little bit easier. 1 second. Alrighty, so what we're looking at here is a 30-minute footprint chart. And, oh, 1 second, let me grab my pen. Alrighty, sorry about that. So what do we see right here? Or what should we see? This is a high concentration of volume. So when we look at our 4-hour at the time of trading over here, when we look on our daily chart, we could see sellers are trying their hands here. Now, here's where I'll pull up this. And I sent a screenshot, right? We're trading at the Hive day pretty much. And I said, we see early signs of an offer, right? This is a daily chart. We see this volume node growing out. We have a selling imbalance, but there's still work to be done. This is an area where we would like to be short. We see sellers here. Are we going short? No. You need to see that the majority of volume is on your side, that you have a significant offer if you're looking to short, of course. If you're looking to go long, well, then you're looking for a bid. So if you guys read my daily plans, I usually put, levels are levels, or zones are just zones until the footprint confirms it. You need to make sure that big hands, algos, banks, whatever you want to say is on your side. So here are the early signs. We still have to wait. There's no short yet. We start to pull down. This is where a lot of traders start to get antsy. They see sellers here. They're starting to pull down. Oh no, I missed it. I have to chase. So, just patience. I said offers growing. This volume node, which was 19,000 here at 10:02, 8 minutes later, it's growing out. Sellers are trying to add, but I still want to see a run of high a day. Now, why would I want to see high a day? Broken? Well, if I'm looking to short too, why would you want to see that? Well, there's no exhaustion at the highs yet. We want to see exhaustion. And what does exhaustion mean for us? Well, if no one's willing to participate up here, we have to go to where we know people are willing to transact. And if we look down here, there's a lot of contracts transacted over there. Now, that did not happen yet, right? So just 1 minute later, boom, we go break high of day. Are we going short yet? No. So this is what this looked like on a 5-minute chart. These were those initial sellers. Everyone's maybe looking at these levels or whatnot. People are selling. Start coming down. People are chasing over here. And then what? They all get ran. So this rectangle is the initial sellers. This arrow is the stop run of those sellers. So I said exactly what I wanted to see on the tape. Above this line and below this line, if it doesn't happen what I'm looking to see, then there's no trade. Now, of course, that did not happen. So the tape is telling us to be patient. It's not, the tape isn't ready yet to go short. You have to wait until the tape agrees with you, agrees with your levels. If not, we're going to continue up. We know that we should be long biased. We know that we should have been in a long already. It happens, you miss it. You just have to wait for the ample opportunity. People watch, just so many people online talking about trading, making money every day. Being a trader as your career isn't making money every single day. It's knowing when you have to be an active market participant and having the discipline to wait until then. Not taking random trades, not forcing setups. Know where you should be involved. You miss it, you miss it. It happens. It happens to me. It happens to everyone. So, didn't happen. Boom, we continue up. So now at this point, 10:19, which is right here, I said I'm waiting for this 30-minute close. I want to see what's going to happen. That 30-minute close would be at 10:30, right? That's the close of initial balance, or the first hour of the cash session. 30-minute close right here, sidelines, right? I want to wait until later of the day for a possible short. I want to see an offer built. Same thing we're looking for back over here. So I could close this now. Right, we have this sell zone here, and I want to see a significant offer built up here, and then my specific entry criteria for me to catch a short. If not, no problem. I won't take a trade today. Once you gain consistency and you know what to look for, you don't need to take many trades a month. And even when you're not sized up, you have to focus on building consistency with small size. If you can't do it with small size, you won't do it with large size, and there's no point in putting your capital at risk, right? The whole point of being a trader is minimizing your risk exposure in the markets, and by doing that is by trading key inflection points. So my 2 cents, take what you will. If you are interested in reading order flow, learning TPO charts, here's my site. I'll leave a link in the description. And I will see you guys in the next YouTube recap.